Good afternoon, everyone. I'm Neil Pline, Director of Sales for Invest and Retire, and I'd like to welcome you to today's webinar, A Plan Sponsor's Perspective of an ETF 401k Platform. I'm joined by Chris Raskevich, Plan Sponsor and VP of Finance for the Raylon Corporation 401k Plan. Now, Chris, ETFs are the fastest growing investments in history, and this has had a lot to do with the fact that their cost is substantially lower than mutual funds for the same diversification features. Now, in 401k plans, those two aspects, cost and diversification, are some of the most important things to consider. The lower the cost of the investments, the more money participants get to keep in their accounts to compound over time. And diversification across asset classes, of course, lowers volatility to improve returns. So it seems natural that in a 401k plan, you would want participants to keep as much money in their accounts as possible, and then with that money, give them the best chance of growing it as possible. So if your plan is already utilizing the low-cost ETFs, how have you decided to address that other important component, which is giving participants the best chance of growing their retirement money?
Well, what we've done is we've hired a manager to do that, an investment professional that set up some model portfolios that range from aggressive to conservative, and people are put into those portfolios based on their age. So it was a good way for us to get the diversification without having to get everybody educated on asset allocation and spend a lot of time on the education part of it.
Okay. Now, when you say that they are designing the asset allocation models and participants are placed in them based on age, that sounds very similar to a target date fund. So why not just use target date funds instead of asset allocation models?
Well, the target date funds that we found before in our old plan were very costly. When we saw how much the management fees were for that, it just didn't make sense. But I also think that they don't address certain needs. Like, let's say you have an employee who comes on board who decides to invest later in their 401k plan. They don't have as much time, and if they had a target fund, that's going to probably be more conservative in nature. Our plan with the different models allows you to change at will. You could be in the aggressive and then change it as you go. So you have flexibility in the Invest and Retire platform that you wouldn't have with a target fund.
Okay. Yeah, so, and we've come across that a lot as well. Like you said, if someone moves out of a target date fund that they've been defaulted into, they're finding themselves in the exact same situation that the target date funds were designed to avoid, which is having the participants have to pick through the complicated investments to design an appropriate portfolio. But
right, you're back to square one where we don't want the employees to have to go through the listing of all the funds and make their own decision. This is already making the decision for them, and we narrowed it down that they just have to know 5 different model portfolios, and they can invest based on their risk level.
Yeah. Now, with regard to those portfolios, how has the performance of these models been for your participants?
The performance has been great. Obviously, the market has a lot to do with that recently, but the employees are able to see, their salary deferrals going into the plan. Our company matches up to 4%, $100 for dollar. Okay. So they're able to see their money grow, and that wasn't always the case in our old plan. But everybody seems to think that the new platform has been has worked very well for them so far.
Very good. So you would say that, I know you mentioned the clarity factor there, so you would feel that because of the fact that the asset allocation models have the clarity, that you feel that they're superior to target date funds?
I think so, because like I said, when we researched target funds, we didn't know exactly what it was investing in, all the fees that are associated with that. But with this platform, you know what you're getting into. Everything's being disclosed. It's very transparent.
Okay. Yeah, and so when you talk about transparency, why is the transparency about cost and performance so important to your plan and your participants?
Well, from a participant standpoint, they look at an account balance and they either see money going in or money coming out.
Uh-huh.
But with mutual funds, you might know what the management fee is, but there's a lot of other hidden fees that are in there that aren't being disclosed. And it takes a lot of digging, and even some of the professionals don't even know all the fees that are disclosed in there.
Sure.
Or not disclosed. So it's hard to tell what your costs are with the mutual funds compared to what the investment retire platform is. It's the ETFs; they're already low cost, and the investment retire platform is already disclosing what the fees are. So it's a lot more transparent than it's ever been.
Sure. And another good point on top of that comes with the disclosure of those fees is the performance reporting as well. Whereas with a mutual fund, you take a participant that has a couple of mutual funds in their accounts, and the performance that they're seeing is the performance of the mutual fund, not the performance of the account as a whole. And that's another area which, with your plan, I can see by being placed into one of the models, your participants actually get to see what their actual performance of their account is.
Right, that's a good point. The models are put together in such a way that you can tell what the model is reaching as far as performance, and knowing what model you're in and how much it's earning or not earning flows into another aspect of the investment retire platform. It's the retirement calculator.
Sure.
It's a great tool that's on the website that, as a plan sponsor, we're sending information to the plan for each participant. As a participant, you go onto the site, and the retirement calculator is already pre-populating your salary and a lot of other information, and then you basically hit a few buttons, and it'll tell you whether you're on track to retire at a certain age with a certain amount of money, or if you need to adjust your salary deferral, or maybe even switch your model portfolio. And all that can be done with a couple of clicks of the mouse, so it's great.
Yeah, and that's a very important point that you bring up. Something that we hear a lot when we're meeting with plan sponsors is we have a 401k plan, and we meet quarterly, and we look at the funds, and if a fund is underperforming, we kick the fund out, and we replace it with a fund that's doing better. And that's great. Performance is always good. But like you said, with the retirement calculator, you can offer the best funds in the world to a participant, but even with superior performance, they're not going to be able to meet their retirement goals unless they're contributing enough, or they know exactly what they need at retirement, or if they can retire at a specific age, they need to retire later, or they need to perhaps take some more risk to meet those retirement goals. So that's an important point. And the retirement calculator is something we're very proud of because, like you said, it should just be easy for participants to do. But things should also be easy for the plan sponsor. So when you talk about hiring an investment manager, is that an expensive or complicated process for you?
No, not at all. I can't imagine that there's a plan that offers lower expenses than what we have for our asset level.
Okay. So when you mention low cost, of course that brings us to a very hot topic lately, and that is the November Department of Labor regulatory changes on fee disclosure, the 404A5 component for the participants, and then in January 2012, the 408B2 component for the plan sponsors. And most plans are trying to figure out how they're going to comply with these. And some say a simple disclaimer on the participant's quarterly statement will suffice. Some say presenting an equation or dollars is better. And some talk about things like exemptions. And so there's a lot going on, and it's all very complicated. But how has your plan on the Invest and Retire platform prepared for this?
Well, we don't have to worry about any of that because from day one, all of that we've been in compliance with. Everything is disclosed. Everything that comes out of a participant's account, fees, everything is already on there. The employees, the participants get quarterly statements. They can see those fee disclosures that are right there. And I think it's interesting how people want to do, maybe exemptions and disclosures and disclaimers. I think that's just, they're just hiding something. So with this platform, we know they're not hiding anything.
Absolutely. It's good to see it on the quarterly statement in dollars and cents so the participants know exactly where they stand. And when we talk about transparency as well, without question, it's one of the most important areas. But one aspect of 401k plans, which is often overlooked due to a lack of transparency, is on the audit. And most plans have a disclaimer audit opinion, which means no protection in the event of a DOL audit. But on the Invest and Retire platform, what type of audit opinion do you receive?
We always have an unqualified opinion. So in that respect, we're also ahead of the curve from some other plans and that are out there. I think there's a statistic that 77% of audited plans failed, and I think the average fine is approaching $500,000 or something.
Correct.
And just seeing that, you can tell the DOL is probably going to go out and hire more auditors so that they can do more audits and get more revenue that way.
Right.
We couldn't afford to take that chance, and fortunately we don't have to with this platform. We're already unqualified.
Sure. Now, did you have a disclaimer opinion before you came to the Invest and Retire platform?
Yes, we did.
Okay. So, given that you have an unqualified opinion now, so you have that extra protection, did the cost of your audit change at all?
We actually pay less for our audit now because we have a limited scope audit. Mm-hmm. A lot of the files can be sent electronically. We don't have to have the auditors here in our offices for a week.
Sure.
It's just been it just seems like it's a night and day difference from our last plan, and it just seems so much more efficient. It doesn't take up a lot of my time as the plan sponsor. The auditors, they can get information a lot more quickly with the way this is set up. And, that obviously drives the cost down. Perfect.
Well, Chris, overall, having been with the mutual fund-based 401k platform with the educational sessions and a lack of transparency, and being on the Invest and Retire platform, which do your participants prefer and why?
Well, I was thinking about that, and I think that the participants really appreciate what we've done to offer them the best possible benefit here at the lowest cost.
Sure.
It seemed like the participants were, myself included, putting money into the plan, the old plan, and it just never seemed to be growing. And then once we switched plans, we could see all the fee disclosures. We could see that there was a lot more in fees that we were paying on the old plan. Plus, the investment choices we have, the ETFs, are, I think, a better way to go about a retirement plan, because mutual funds, you're paying a manager to manage those funds, and you're trying to reach the benchmarks, which are the ETFs. So we're already investing in the benchmarks. Right. So I think that's been helpful. And I think the statistics on our plan can show, right when we started and offered this plan, I think we were at a 40% participation rate, and now we're up to 60%. Wow. So I think it's helped drive that. And like you mentioned at the beginning, it's not because of a lot of education. We can say all we want about asset allocation. The employees still don't understand that. So we've tried to make it simple, and I think because it's a little more simple, we've gotten increased participation than maybe we wouldn't have otherwise.
Perfect. Well, that's great. Chris, I want to thank you very much for your time today, and everybody else out there watching, please join us in the future for additional webinars from Invest and Retire.